In this video, I'm going to be going through every single fund, so index fund and ETF that I personally invest into. One of the most common questions I get through Instagram mainly is what index fund or ETFs do I use personally? So you may have been directed to this video from my DMs. Of course, if you do have any questions, you always can DM me and I'll try and help you out. But yeah, this video is going to be focused on the index funds and ETFs that I personally invest into. I'm going to run through them. There's only 3. I'll tell you their names, how much I have in them, and also just a bit of an explanation of why I hold and invest into these index funds and ETFs specifically.
Yeah, boy.
My name is Ryan and this is Making Money Simple. Welcome back to another YouTube video. I aim to do weekly videos, so feel free to subscribe and hit the notification bell so you never miss any future videos breaking down personal finance and investing. You can find a link in the description with all my other social medias and also the products that I sell. But this video is going to be focused on the ETFs and index funds that I personally invest in. So let's get started.
But wait! There's more!
Before we start, let me just show you a quick summary of the 3 that I mentioned that I actually invest into. You can see here this index fund / ETF split graph taken directly from the MMS investment portfolio tracker spreadsheet. Link is in my description. One place to track all of your investments. The best spreadsheet on the market, undisputably, is what I've heard. So check that out if you're interested. But as you can see, I have 3 funds, as I mentioned. The FTSE Global All Cap, which at the time of recording is around 84%. VUSA, which is an S&P 500 ETF, which is around 9%. And VWRP, which is a FTSE All World ETF or Global ETF, and that is about 7% at the time of recording. So now I'm going to run through each one, give a bit of reason as to why I invest into that specific fund, and hopefully based on the reasons I give, that can help point you in the right direction of which is the best option for you. But one more thing before I get into the specific funds. Ultimately, the reason why I have 3 different index funds and ETFs I invest into is because I have so many different accounts on different platforms, and different platforms offer different funds. So that is the main reason why I actually have 3 funds here. If I was only using one platform, I would choose Vanguard and I'd only be invested into the FTSE Global All Cap. But I also, as I'll be showing you, have accounts on some of the zero commission brokers, specifically Free Trade and Trading 212, and that is where these other ETFs sit. They don't offer the FTSE Global All Cap, but I store my money in a fund, so I use a low-cost ETF. In this case, it's VUSA and VWRP. All right, anyway, that's enough talking. The very first fund, as you can see, is an index fund, and it is the FTSE Global All Cap. I've got about 83% of my money in there, and that is split between my Vanguard Stocks and Shares ISA and my Hargreaves Lansdown Stocks and Shares Lifetime ISA. I no longer contribute to the Hargreaves Lansdown ISA. I'm not bothering with that anymore, but I've still got roughly about 2 grand in the FTSE Global All Cap. The rest of my money is then in my Vanguard Stocks and Shares ISA. I'll put a screenshot on the screen so you can see, but at the day of recording, I've got my ISA value at 12.8k, and 100% of that is in the FTSE Global All Cap. I've already made a range of videos on global index funds, why I use them, and comparing the FTSE Global All Cap to the FTSE All World. But ultimately, this fund is my favorite fund. It's a global fund and it's as diversified as you can get. It's got over 7,000 stocks. It's got a low fee of 0.23%. It's globally diversified across the entire world in sort of proportion that each country makes up of the global stock market. It includes large, medium and small size companies. So it is pretty much as much diversification as you can get for a very low fee.
That's a lot of damage.
I, of course, believe that you cannot beat the market, so I use index funds, and I also believe you can't guess or predict which country is going to perform the best, which is why I use global index funds, because then I take all the guesswork out of it. A lot of people, and as I'm going to discuss shortly, use US funds, and of course US funds are diversified, and because you know a lot of the big US companies will make their revenues and profits from all around the world, but ultimately countries do grow and contract over time. The UK 100 years ago made up 25% of the global stock market, and now it only makes up 4%. So just imagine you'd only invested in the UK. That has contracted massively compared to other areas of the world, which is ultimately why I want to be in a global index fund. And that's really all there is to it. I use index funds, use global index funds, and most of my money is in here. The only reason why I invest in any other fund at all is literally just because I like testing out new platforms, opening up accounts, seeing what the features are, so I can form my own opinion on them and then help people out, because I know not everyone wants to use Vanguard and not everyone wants to use the same fund as me. But yeah, if it was up to me and I had one platform, I'd have all my money in that one fund. Fund number 2, and I'm gonna go with VWRP first, and this is on free trade. So at the time of recording, I've just gone on the free trade app. I've got 14 shares, and it's roughly £1,150. As you can see, it's pretty much my only investment other than a few shares in Diageo because of Guinness. But yeah, so the thinking behind that is free trade do not offer, so obviously I've got an account with free trade. I really like the platform, although I have my stocks and shares ISA with Vanguard. They don't offer index funds, they only offer ETFs. And of course, I want a global ETF. So the two main global ETFs that Vanguard offer are VWRL and VWRP. They're essentially the exact same thing, just one of them is income, one of them is accumulation. VWRL is income, which means the dividends are paid out as income. VWRP is accumulation, meaning the dividends are reinvested back into the fund.
Here comes the money.
I want to make my investing approach as hands-off and as passive as possible, which is why I use the accumulation version, and that's essentially, yeah. So essentially, whenever I'm lucky enough to get free shares, if I want to get a free share, use the link in my description, I will then sell it. Once I then build up to have enough, I will then buy another share in the FTSE All World and essentially keep my money in that global accumulating ETF, so all of my dividends get reinvested. I made a whole video on the differences between the FTSE All Cap and the FTSE All World. I prefer the All Cap, and the main reason why is because the All World doesn't include small cap stocks. Now, in the grand scheme of things, they pretty much have identical differences over the last 5 years. I think they literally mirror each other almost perfectly, but I would still like that extra diversification, even though it's only roughly 5 to 10% of the FTSE Global All Cap. But of course, it's not available here, so the next best thing in my opinion is the FTSE All World, and I use an accumulation version just for ease. The third and last fund that I invest into is another ETF. This is on another zero commission platform, this time trading 2 on 2, and it's VUSA, which is an S&P 500 ETF, and once again it's a Vanguard fund. Once again, this is another account. Trading 2 on 2, similarly to free trade, don't offer index funds, so they haven't got the FTSE Global All Cap, but they do offer ETFs. And Trading 2 on 2 is also very good because for some ETFs, the VUSA included, they offer fractional shares. So as you can see, I've got 22.688065 shares. And that is one really good feature about Trading 2 on 2 is the fractional shares that they offer on some ETFs and stocks. Now, when I first started putting money into the VUSA, which was a while ago, I don't think at that point they offered fractional shares in VWRL or VWRP, because Trading 2 on 2 also offer them two funds, which is why I then, once again, similarly, whenever I put a bit of money in Trading 2 on 2 or got any free shares, I would sell that and then buy 0.1 of the VUSA, and I've been slowly building up over time. So now it's worth, at this time of recording, about 1.4k. Now at this point they do offer fractional shares in VWRL and VWRP, but to be honest with you, this is a relatively small amount of my portfolio, so I'm just going to let that money sit in the VUSA over time. Of course, I do prefer global funds to US funds, but the S&P 500 is the largest 500 companies in the US. As I mentioned, they still make revenues and profits from all over the world, so it's sort of almost globally diversified in that sense. One pro is that it's got a lower fee compared to the global funds I've been mentioning. So the global funds are around 0.22, 0.23% yearly fee, whereas the S&P 500 is very cheap at 0.07% per year. But saying that, of course, I'm not really planning on adding anything to this. And that is one of the most common questions that I get. Should I use US funds? Should I use global funds? If you're thinking of that question, you're winning already because you're wanting to invest and you're looking at trying to optimize your investments. I personally take the global approach, but of course, global funds are still around 55% US stocks, so you're still very heavy in US stocks. Of course, if you maybe don't believe in the global approach, the US is probably the next best thing. And some people would say investing in the US is better than investing globally. It's of course personal preference. I personally stick to global funds, as I've mentioned, but once again, I do have some money in the VUSA. That makes up around 9% of the total money invested in my index fund / ETF split, and that wraps up the 3 different funds that I personally invest into. So yeah, thank you very much for watching this video. I really appreciate it. I hope this has helped you out a little bit. Of course, investing in index funds is the way to go in my opinion. And realistically, if you're using either US index funds and ETFs or global index funds or ETFs, they're both good decisions. You're buying and holding for the long term, investing consistently. Those are the main things that matter. But hopefully this little video and these explanations have helped point you in the right direction and inform you of the best approach for yourself anyway. Of course, any questions, let me know. What funds do you invest into, if any? Let me know. Always interested to hear other people's approach to this. And yeah, subscribe so you don't miss the next video, and I will see you in the next video.